Good morning and welcome. I'm here today with our latest guest, FIBA TV. So welcome to Adam Ware of Hilltop Credit Partners. Welcome, Adam.
Hi, Adam. How you doing?
Great, thank you. It's nice to see you. I've been wanting to talk to somebody from Hilltop for quite a while, so I really appreciate you giving up your time this morning for me to ask you a few questions. So perhaps I could begin really by asking you, how did Hilltop Credit Partners come to be in the bridging industry?
So the actual story starts with the fall of the Berlin Wall. Our CEO, Paul, is half Estonian, half American. So he was very much a finance person, but then moved back to Estonia to explore his roots. And it was that perfect time where there was this sort of capitalism, move from communism to capitalism bubbling along. And he started helping SMEs writing business proposals for the local bank. And then the local bank approached him and asked him to set up a credit function for them. And he worked with them, sort of building up that business. In the meantime, there was a property market growing as it had moved into private ownership, and Paul started developing his own properties with that. And so he had this bundle of cash that he was turning into more and more properties. Eventually, with the help of a lot of different banks with that growth, he actually grew his business into a vertically integrated, one of the largest real estate businesses in Eastern Europe, which he eventually sold in 2008, exiting at the perfect time. Now, for him, the key that he thought was to the growth of this was his access to good credit, reliable stretch credit, which means that he could stretch his equity further. And now looking at the UK property market, where we've got a huge underserving of SMEs and a huge requirement for new housing, our one-stop funding model that we've put together is looking to help developers in the same position as Paul was, stretch their capital that much further with that certainty, and help solve the affordable housing crisis.
Brilliant. What an incredible story. I want to explore that one-stop funding in a moment, but what an interesting story. When you started, I didn't know where you were going with the story. I thought you were just going to be a very long story about German history or something, but no, that's really, really interesting. So thank you for that. So coming down to sort of a little bit closer to time now. I mean, what do you think's happened in the last couple of years to the growth of the short-term lending market in the UK?
So I think it's been a product of the past 10 years into the recent 5 years. Over the 10 years, we've seen that it's grown more and more the mainstream and more professionalism. And I think those who were the challengers initially have become the incumbents, but that's paved the way for more and more entrants, particularly post-Brexit coming in, and with COVID and everything else. And managing to even shake up where specialist lending has been now. So it's changing incumbents. It's coming up with new ways of approaching things. It's very much moving away from being rate driven into being solution driven, where bridging was before. We sort of come full circle, gained from the professionalism we've got now. And a lot of the lenders now are working with that professionalism and that transparency, but being the solution led that we had before, benefiting from the cheaper rates. Interestingly as well, I think tech's quite a big word that's been bounding around at the moment. I think in certain manners, particularly over the past couple of years, tech has been a lot more of a push from everyone in the industry, from sort of AVMs for bridging lenders who have been able to get through lower leverage deals where you can just sort of snap your fingers and it's done. We use a similar sort of thing where we're doing a lot of data in analysing comparables up front. So developers aren't putting their hands in their pockets for evaluation until we're all agreed that these things are pretty much there. And I think, interestingly, sourcing sites, particularly the past year, have come up and been quite interesting. And I think they're really good for driving the more straightforward deals and getting brokers loads and loads of options to get that competition there. Although I think for the more complex things where you need a bit more of a bespoke solution, I think there's more development in that area to come, and I think there's a lot more input from the brokers themselves to be able to deliver that part of the market.
Some great observations there. Everything from AVMs, obviously the use of new tech. I mean, I've been heavily involved in sourcing tools for many years, and you're quite right in your observations there as well. So and I think people looking for funding solutions, but rather than being rate driven, is a very good point that's probably not discussed enough at the moment. And of course, you mentioned professionalism, and really that is one of the keys to how this market has changed over a number of years. That real drive to professionalism, the changes that we're seeing, with I might say from some help from regulation as well. So, but So let's get into Hilltop then. What is this one-stop funding and how does it work?
So what we're trying to achieve is to eliminate the uncertainty and time taken to put together a capital stack. So we look at a whole loan facility which stretches all the way up to cover the senior plus the mezzanine, and then we can potentially look at equity investment behind that as well. So the general metrics for the debt is up to 90% loan to cost and 75% loan to GDV. So that then means that they're not having to worry about two sets of valuations, two sets of legals, two sets of monitoring surveyors. Developers are only working with one underwriter all the way through. So it eliminates any sort of time taken up negotiating into credit deeds and everything else. And with that, what we try to do is typically price in the same sort of region as the more lower leverage traditional lenders. But then we build in a profit share at the end with the developer. And this has two advantages for them, which one is that with the reduced interest rate, they've got a reduced interest provision in the facility, which means a higher, bigger loan day one and less of their capital going in, allowing them to stretch it that much further. And it also means that our exit is aligned with theirs because we're both profiting from the successful delivery of the scheme. So we're working with them, not against them, if there are any delays, bumps in the and everything else. So we're working together as partners to deliver the scheme as well. And then in addition to that, we do a little bit of bridging. We look at sort of pre-development bridging, where we're helping developers secure sites and then maybe rewrite planning, maybe work through an outline planning consent and discharge the reserve matters. And because our one-stop funding allows those greater day one lends on the development side, we can access pretty high leverage bridging, 70% of residual value, 90% of cost, for developers who do need to secure sites quickly and not put too much money down.
Yeah, I mean, that's really innovative. I like the sound of that, and and that, even that little equity piece as well, the profit share part of it. I mean, that's really, really interesting, and something which this media, us having a chat is probably easier to get across than actually writing it down and putting it in the printed press. Even from if it's electronic, it's hard to get that across. But you explained that very, very well, Adam. So thank you for that. So what's your target market then? Who are you actually looking for? Who would be, if I had somebody now, who'd be your ideal customer?
So we're looking to help developers that are building affordable homes that want to take their business to the next level. These might be people that know their own geography really well, no matter where it is in the UK. It could be Dover, could be Glasgow, Belfast, Taunton. They might be in the sort of building 5 to 10 houses and they've seen this scheme that they love at 30 and their mainstream lender doesn't like it. But it could be sort of developers delivering bigger schemes, looking at massive PRS blocks, and their sort of target GDVs are sort of 30, 40, and they're trying to step up to 100 million. So it's really people that are trying to provide affordable housing that haven't got the access to capital. Maybe their current lender doesn't want to push them as far as they can go, that really want to achieve their potential.
Right. Now, of course, I suppose the caution in me says you're lending at high leverage, that's going to come with higher risk. Of course it is. So how do you avoid the usual pitfalls of high LTV lending?
So we're quite good versus traditional lenders because we've got fairly broad expertise in our team. So we've got partners in the business who've been developers and investors themselves. They've developed very big schemes. They understand what goes wrong, how to get around it and everything else. We've got people in the team like me whose background is specialist lending, so we understand the typical underwriting quirks and how to underwrite a deal properly. And so we've also got an analyst who has got a history in mezz lending, so understands how debt really performs at that high gearing level, particularly when you haven't got the comfort of the first charge. Yeah. So it's very much a team that puts their heads together and helps deliver with the developer. Also, as a one-stop solution, because we're going all the way into the capital stack, we avoid that risk of the capital stack falling out. So where you've got a site there's a bit of an issue and your mezz lender's not happy, but your senior lender's all right, and then it just frustrates things for the developer. We haven't any of that risk of it falling out, which means that we're sat there and we're quite happy working with them. And also we're fairly choosing the schemes we back. We like working with developers that know their own local market and that deliver good schemes. We're aiming for affordable housing, so we're not looking to build big £2 million penthouses where the liquidity isn't there. We're very exit driven to look after that. And additionally, we share and invest with Roundhill Capital. So they've got 10 billion of assets under management, their own development pipeline of about £4 billion in EV. And they've got experts across the spectrum in terms of development. So when things do get a bit bumpy, we've got planning experts, we've got development experts, we've got marketing experts who provide all that support with us. So we're all working together to move out of those issues if anything does come up, which means we can help mitigate those higher risk things that your traditional lender who's just thinking about worst case scenario, how to get my money back, typically they fall into those pitfalls.
No, brilliant. I mean, you probably answered my last question there, because my last question was, it's a magnificent offering that you've got at Hilltop. It's something that is quite unique. I mean, and obviously you say you've got the expertise in within your team there to be able to help all sorts of different developers and brokers. So how does your approach then? How can we best sum up the approach you've got so it's going to be a benefit to our members at FIBA?
So in terms of the product, it's very much saving the time, effort, and cost of piecing together a capital stack. So brokers that are looking after clients that are return on equity driven, want to turn sites around quickly, want to step further, they know that they can come to us, get a commitment from us, and they aren't then chasing around trying to do the rest of the work. We've also got very much a partnership approach. So with brokers, we understand that their expertise is definitely negotiating finance terms and everything else, but we're happy to also say, look, we'll work with you, but let's bring the developer to the table. Let's have a dialogue between us and all play to our strengths. So for a broker, it might be negotiating our terms. For the developer, it might be getting into the tendering process and everything else where the developer might not have that reach. And so it's very much, let's all be partners together and let's deliver these sites as a team so that everyone wins.
Brilliant, thank you. And just to close, really, our audience are always really interested to hear from our lender partners and what they think can happen in the future. So Adam, just if you could sum up, how do you think the specialist property finance market is going to behave in the next 6 months, 12 months, couple of years?
I think there will be huge growth across the whole spectrum. So I think in the more vanilla space, as we see new challenger banks incorporating that are looking to build up lending books, specialist lending provides a fairly lower risk but higher return market for them. So I think there'll be a lot more choice at the cheaper rate end for that with the more straightforward products. But I think also in the more specialist space, the high gearing, the riskier sites, there's a lot of capital floating around and a lot of people that are keen to get in for those higher returns. I think those guys will benefit, particularly with brokers whose views have realigned with that. Let's get a solution done. Let's not worry about cost too much. Let's sort of get these solutions written where you've got the flexible capital, which is slightly more expensive but able to perform. And then finally, I think it's good to see there's quite a few intermediaries at the moment who are looking to move into the lending space themselves. And so it's more competition for the incumbents, but intermediaries moving into the space are always going there to try to solve the problems that they're seeing and their frustrations. And so they are creating new best practices and helping to evolve the industry so the incumbents can really change up what they're doing and make everything much smoother for everyone else. So I think as a broad market, and there's a lot of growth, I think, coming from every single area with it.
Adam, that's been fantastic. You've really explained exactly what Hilltop Credit Partners do, and also I like your observations at the end there, very positive for the market, which I concur. I wholly share that with you. I think the specialist property finance market, it has got a very good outlook, and you're quite right. There's more people coming into that space, which is bringing more business in as well. So Adam, thank you very much for your time today. I thoroughly enjoyed that. Thank you.
Lovely. Thanks for having me.